Traders, in this video I want to go through the chart bar by bar, and I wanted to go through my thought process, what I was thinking when I was watching Market Brain live today and how I was looking for the setups. Now my goal is to identify the bias and to identify the pattern. And what is the bias in this market when I would be watching the chart live like this? The bias is clearly bearish. Right from the very beginning of today's session we have a gap down, and this blue line is 21 bar exponential moving average, supportive indicator that is helping me to identify the structure, and also it is a key entry point. I can see that this EMA keeps consistently rejecting prices every single time. We managed to get above EMA for a short period of time, but we instantly pull back below. So this is indicating to me that this is a strong bearish downtrend. Now my job is to identify the pattern. Right here I have this channel working to the downside, and my goal is to identify the pattern because I want to follow the trend line rule, which says after there's a break of a channel, traders expect to create new extreme. So just because I have a break of a channel, that doesn't mean I instantly stop looking for longs. No, I expect after a break for prices to create new low for the downtrend. And trend line rule not only applies for this bigger downtrend, it also applies for the short-term uptrend as well for the corrections. I have a correction to the upside with the break, new extreme, telling me this is the clue that buyers are over and the downtrend, the main downtrend, can resume now. So this is confirmed by strong push below EMA, and I can see multiple rejections of the EMA indicating bearish structure. So when I'm watching this, I see new low, first attempt to sell by the market, pull back, second attempt to sell by the market. Now second entry short is a high probability setup, and my goal as a trader is to only look for high probability setups at key entry point. So this would be a two-legged pullback, but I cannot take this entry just yet. Even though EMA keeps holding, notice I have like 15 bars stacked right next to each other. So this is a sideways structure smaller than the trading range, and I don't want to risk taking any entry before the market open, especially once the structure is sideways like this. I do expect new low to be made, but I need to have a deeper correction before I start selling just yet. The market keeps going sideways for a little bit, and you can see the market eventually continue pushing lower. Now at this point on, stock market open, and right here I created break new low for the downtrend. Alright, so this downtrend has a break and new low, but this structure already is looking very bearish. So I cannot start looking to go long just yet. I can see that the EMA kept rejecting prices, and every single time still looking like a strong downtrend. So I have new low form. This is where I can reset the count, and notice what I have. I have new low, first entry short, first attempt to sell, pull back, second attempt to sell, and notice what I have. I have a second attempt to sell here. This is a second entry short. Can I go short here? I cannot sell here. Why? Because this downtrend, the first main downtrend, just had a break and a new low. So it is too early for me to take second entry short. However, can I go long here? I cannot, because the bias is still strong bearish. Okay, this is where I need to take into consideration the structure and combine it with the trend line rule. So even though I have a new low, I cannot go long just yet. And notice the reversal bar, how tempting this is looking for buyers. It looked very bearish. At the end of the bar, everybody's starting buying. So you know everybody's going to go long here. They're going to get trapped. And notice what happened. Everybody was filled and instantly reversed down and created big bearish bar. Now I call this a double trap, and this was my first trade for the day. Now when I was watching this and I saw how EMA keeps rejecting prices, and I saw how nicely prices are working lower and lower, I was even looking for a potential flatter channel like this, because this is what is called a spike and a channel pattern, which means that the first leg is going to be steep, but market cannot create the second leg steep like that. The second leg tend to be flatter. Now, this is showing me that the spike and a channel may be valid, but this is a double trap entry because everybody who went short on a second entry short too early just got trapped, and everybody going long on a failed second entry short too early, they got trapped as well. And you can see bias is clearly bearish. You close below EMA, big bearish bar. So this is what you can do when you're patient. When you're not sure, you cannot take early sell. You cannot sell below this bar anyway because it is a horrible signal bar, and you cannot go long at the same time. So you guys can see this was a great first trap, my first trade for the day, and I managed to get my runner. I trailed it above this swing right here. Now, the downtrend keeps resuming. So when I'm watching this, this is a clearly strong bearish downtrend. This spike and a channel was confirmed. I see a lot of small bars working lower, and this is indication that this may be a strong bearish downtrend. EMA keeps rejecting. So at this point on, my goal is to follow the rule of never counter and trade and just look for high probability setups at the key entry point. Okay, so this is the lowest low. I have first entry short, second entry short. It's far away from EMA, and I have another sell opportunity. Can I sell here? I cannot, because I have the short-term uptrend working in play. Notice how nicely these candles are fitting inside of this channel. This is indicating to me that this channel needs to get new high, just like it did right here and just like it did right here. So I cannot sell even though we're at the EMA. I'm being patient here. I'm potentially looking for a lower high. If we get lower high here, tick high reversal down, bearish bar, I would be tempted to sell this. Unfortunately, lower high never formed and market created the move to new extreme. Okay, so now that I'm watching this, I have a strong bearish structure. I have the first leg up, correction, second leg up. I'm just going to slightly make it steeper like this, and this is a two-leg up pullback. Okay, same thing right here. I have first leg up here, second leg up here. Market likes to move in pairs of twos, and this two-leg up pullback is telling me that buyers are over. I can combine it with the trend line rule that this short-term correction just had a break at a new extreme, and the bigger bias is down. So I'm not looking to go long. I'm just looking for opportunity to sell, and the opportunity will present itself after the bullish correction will play it out, which it did play out right here. So right now I just need to wait for prices to push below EMA and confirm bearish momentum. Okay, so I can see prices are working lower. I have new high, I have first entry long, failure. Now this is a lower high, and this is already a tempting trade to take. Lower high, below EMA, you're looking for new extreme. The spike in a channel is the main pattern now, and I'm looking for prices to pull back below and create new extreme following the trend line rule. But since this bar for the most part formed above EMA, I didn't really like going short just yet, even though the entry might be decent. I find it slightly aggressive. I was expecting to get a failed second entry long, and notice we have new high, first entry long, pullback, second entry long, failure. I entered this on engulfing entry. This was my second trade for the day. Gorgeous failed second entry long, high probability setup. Notice everybody went long on a second entry long. Nice bullish bar, but the traders are not taking the entire context into consideration and how bearish this structure looked. So this is clearly a bullish trap, plus this uptrend played out, two legs up, and this main downtrend needs to get new extreme. So this is a great short setup and great long trap. And notice another beautiful runner that I trailed all the way down here. Finally, I was managed to be done within 30 minutes after market open. It's been quite a long time since I managed to catch two trades back to back this quickly, but this is absolutely fantastic feeling when you can get two easy high probability setups right after market opens. I would love to have these days any day in a week. Market keeps correcting. I have a break and I have new extreme. So which means right now I expect correction or possible reversal. Okay. But since the structure is still strong bearish downtrend, I'm more hesitant to buy. I'm just expecting correction. Now I have a break and new low, and I have new low, first entry short, pullback, second entry short. I have what looks like a high probability setup, but I cannot sell. First of all, I have short-term option in play. And second of all, it's above EMA, and I just had a break and new low. So it's time for correction. You guys can see what can happen if you're too eager and you don't follow the rules and you're trying to force trades. Okay? Market created a break, new extreme, telling you that this uptrend played out. It is safe to sell, and market continue pushing lower with strong bearish rejection. Okay, so this is resuming the main pattern. When I was watching this, I was expecting to get a lower high quickly below EMA, but that never formed. Market continue pushing sideways, and you never got decent lower high. You get lower high here, but basically it's above EMA, doji bar, can't really sell just yet. But eventually the main bias took precedence and market continued pushing lower. Okay, so at this point on, you have to reanalyze the structure. Okay, I have a break, I have a new extreme, but we have rejection here and another rejection. And if trend is strong, there's a possibility that there's a wider pattern. So what you can do is you can find a slightly wider pattern like this. I think this was the pattern I was looking for today, something like this. And this also fits nicely off the highs. And this is where the high probability setups will appear, because market goes through correction phases and push phases, and you want to sell high. You want to wait for market to pull back to key entry point and sell high. You never want to be selling all the way down these lows once the push phase is ending. So I'm just going to zoom back, and you can see what a strong bearish downtrend this is. All right, so you have new high, you have first entry long, pullback, second entry long, failure. Now this is a failed second entry long, a larger two legs up. I'm going to mark it. This is slightly aggressive entry, but it is nice bearish signal bar, big one off the EMA. And at this point on, it's starting to be obvious that the downtrend is getting quite strong. So this is a decent high probability setup to take. You would have to ride this out just a little bit, but eventually market kept pushing lower. Now you're still expecting to get a second entry short two-legged pullback at the key entry point, but you can see market is not offering a good setup. Everything is just a first entry or all the way down at these lows. So at this point on, once again, I'm going to zoom out. There is no denying that this is clearly a strong bearish downtrend, and I'm just focusing to get entries at the key entry points. Following the rules, I'm going to draw the short-term corrections. I have to remember that I cannot take longs by any means. Even though it may be tempting, even though there may be a nice bullish signal bar, these strong trends are designed to lure weak traders in, thinking that market cannot go any lower, but wrong. It will keep pushing lower and lower and lower till the day is over. That's how these strong trends are designed. So never be tempted to pick a bottom here. Always just wait for these bullish corrections to play out. This is why we're drawing the short-term channels, and then once you're at the key entry point, take a high probability setup. Now we have new low, first entry short, pullback, second entry short. Now this is a second entry short at the exponential moving average while the downtrend is strong. But what is the wrong here with the setup? The signal bar is horrible. It is a doji bar, one tick bearish body. The setup worked, but I can't really mark it. It's a doji. You know what? I will mark it as aggressive entry because the context wise it makes sense. The downtrend is very, very strong, small double top, but the signal bar is really bad. Maybe when you're watching your chart you have slightly different signal bar here, so with better signal bar you can go short here and it's a little bit more aggressive right here. Now we have a bullish break of the channel. Now what does it mean? This uptrend broke the channel, so I expect for prices to create new low, and I expect the same setup as I did right here. I expect a failed second entry long below EMA looking for a new extreme, and I expect a failed second entry long below EMA looking for a new extreme. So I have new high, first entry long, micro double top, which means I have to reset the count, pull back, and market is pushing lower. Now we have a lower high. Now when I was watching this, even if there is micro double top which resets the count, visually this would look like a failed second entry long. We would have first leg right here, pull back, second leg right here. Ideally, here I was expecting to get a lower high, technically, or visual two-legged pullback, failed second entry long, which would have been a great setup to take because you expect new low, repeat pattern of this earlier, but it never formed. You would have to go short all the way down here, far away from EMA, and even though it worked, can't really sell the market at this point on just yet. But this is what you're looking for, letting these corrections play out, and you wait for prices to push below EMA and confirm the bearish momentum, and you want to wait and take a high probability setup, which is a second entry short or failed second entry long, and of course lower high. Now market keeps pushing higher, and at this point on you have a break and a new extreme, so you expect correction or possibly reversal, and you can see that the finally market is proving some strong bullish momentum, so we may finally have a decent bullish correction. Now when I was watching this, I had my channel tight like this with the break, move to a new extreme, but there is a wider channel working to the upside, and right now we have new high, first entry long, pullback, second entry long. Now when I was watching this, I was still expecting to get a failed second entry long below exponential moving average, but once this big bullish bar managed to push so strongly above exponential moving average, this now shows break and a new low for the downtrend, strong bullish move up above EMA, and you have second entry long. So this is a decent entry, and after such a strong downtrend, when you just have a break and new low, it is reasonable to expect that the bullish correction is going to correct for a longer time. You will most likely not just get instantly another push to a new low because you just had a break and a new extreme. So this is a decent second entry long because downtrend played out with the break and new low, and since you push so strongly above EMA, this confirms that the correction is going to be stronger. However, when I'm watching this, notice the overall structure. This is clearly a strong bearish downtrend, which means there is an 80% chance or 90% chance that this main bias will resume after this correction play out. For that reason, my way how to trade this is to wait for this bullish correction to play out and just start looking for shorts, because I'm taking entries with the main bias for the day. There is no denying how strong the bias was today and how strong the downtrend was. I'm following the simple price action. So when I'm watching this, my goal is to not particularly look for long entries. My goal is to just let these corrections play out. You can see that I'm drawing these trading ranges because I expect a correction phase. So this is where I expect the resistance, this is where I expect the support. And once market is all the way up here, I'm looking for sells and I don't want to look for longs because market may eventually with time resume the main bias. You can eventually have uptrend reversal, but this happens not so often. Most of the times the main bias will resume and you never want to start going long too quickly. If there's going to be strong uptrend, you will have plenty of opportunities to buy the market. I'm sticking with the overall bias because that's the safest way to do it, and most of the time the bias will resume. However, here I don't see any high probability setup. You're way at these highs to take any long, but I don't want to take short just yet. I need to see push below EMA and preferably some sort of reversal pattern or anything like that. The market is just hanging around at the top portion of the string range, so this is quite an indecisive area where you have to be patient. But notice what you have. You have small little double bottom which resets the count. I have first entry short, pullback, second entry short, and you can see if you move the resistance slightly higher, you can see you have a second entry short while the uptrend played out with the breaking new high, and you're selling at the highs of the string range. You're going to most likely pull back to the EMA, big bearish bar, beautiful full trend bar. So this is a decent second entry short to take because you're playing the string range rule and you're combining it with the overall main bias, which is bearish, and you're most likely going to reach all the way down to these lows and possibly create a brand new trend. Now market is reversing down and you have a lower high, but it's way too far down. You're not even close to the exponential moving average. You would be selling all the way down here at these lows. So this lower high is way too low and already moved way too far down. Now, I still had my resistance a little bit like this. We have new high, first entry long, second entry long failure, which it's shame that it formed above EMA. Had it formed below EMA, you would have been attempting to sell the reversal pattern, but you managed to push above EMA, test the resistance, and only after that push lower. So this is not a bad entry, much more advanced, because at this point when you're hanging around at the top portion of the trend range, you really want to see prices to stay below EMA for quite some time to get a nice high probability setup. But the main bias will most likely resume, so you're sticking with the main bias, however, quite advanced entry. Now notice what is happening. Once the market is breaking lower, this is what is telling you that the main bias is resuming. So I'm looking for high probability setup, second entry short at the exponential moving average, new low, first entry short, pullback, second entry short at the EMA, big bearish bar, second entry short, high probability setup. Let me just quickly mark it. You would have to sweat it a little bit because it looked like you're going to get stopped out, but the context is in your favor. Overall bias will resume. EMA keeps holding big bearish bar. It is a little bit stacked, so a little bit more aggressive, but the odds are really strong here that the main bias will resume. And notice what a runner you would have had because market kept pushing lower. Now at this point on, you can also identify a bigger channel because we're drawing a channel with the direction of the main trend, which was bearish. So there's a likelihood that this channel is going to come into play. We have a second entry short here, new low, first entry short, pullback, second entry short, but it is all the way down, not really close to EMA, even though it worked counter the market. And you can see that we have what looks like a potentially overshoot, but market keeps pushing lower, and overshoot is one-time steep erratic move. So this is telling you that overshoot is not valid, and there is most likely just a wider pattern. Second entry short, once again, not close to exponential moving average. So even though it keeps working, you really have to be patient here because you're not really touching the EMA, and the next time you will take it, it may fail. Now, market is correcting. I'm going to redraw the shortened channel, and we have new low, first entry short, pullback, second entry short. So this is a double bar entry because the first signal bar was bullish, which you cannot sell below. Then you have bearish bar, which means you can sometimes, if the context is good, wait for trigger below this bearish bar and then use a limit order. But notice what you have. You have bullish inside bar, which means you don't even have a trigger below this bearish bar. EMA is getting flat in the middle of these bars. So I would really want to see a lower high, but it never formed. Market just continue trending lower. So even though this is a second entry short, you can see that it didn't really form correctly. First signal bar, the main one is bullish one. Then you have a double bar entry followed by inside bar, bullish bar, which didn't trigger below this bearish bar. So a little bit ugly, stacked EMA, multiple bars, congested. Now the strong bias keeps resuming, and once again, you have to keep zooming out periodically so you can remind yourself what is the bias. There's no denying this is a strong bearish downtrend. You're not buying, you're just looking for high probability setups at the exponential moving average. That's your job as a trader. You're not supposed to take a lot of trades. You're supposed to take the best ones, the high probability ones. So don't feel like you need to force an entry. The market is finally breaking a channel. So we expect for this channel after a break to market form new extreme. So we expect to get a failed second entry long below EMA, and we can see that we're just pushing higher. And now we have first leg up, pull back, second leg up. Uptrend has a break in new extreme, indicating that this bullish trend played out. First entry long, pull back, second entry long, failure, but you don't get triggered below this bearish bar, and it is a doji, so there is no entry right here. So the second entry long is technically working, and you have market pushing lower, and you have lower high, and it looks like a visual two legs, because visually on a larger frame this looks like first leg down, first entry long, second leg down, second entry long. So this is visual two-legged pullback, first entry long, second entry long. Visually you can see that there are two legs. This is the first leg correction, second leg correction. So this is a second entry long failure visually, and a lower high, you're right at the EMA and you manage to close fully below the exponential moving average. Uptrend played out with the break, a new high. You expect to get new low for the downtrend and high probability setup, and the market eventually, though we did eventually create new low, we have new low, first entry short pullback, second entry short, but it's above EMA. Not a bad entry, but I'm seeing this trade in hindsight, so I probably would not have taken a trade above EMA like that. And you can see after new low was formed, what do you expect? Correction or possible reversal, and market is about to close. So you can see perfect trend line rule. After there's a break, new low form, market is rallying up out of here. So this was the main picture for the day. I hope it was helpful to go through the chart bar by bar so you can see what kind of channels you're looking for, how you're sticking with the main bias, and what kind of setups you're looking for. When you see a trend like this, a lot of small bars, slowly but surely working lower, EMA rejecting prices, don't really start looking for longs too quickly, because there's a high chance that the market, the main bias, will resume. And today price action worked perfectly as well, because the main bias truly resumed again and a brand new downtrend started.